Since about 3 months ago, I'd been posting my trading signals on my website, marcuscomelub.com. If you click on the trading menu and choose the pairs that you're interested in, leave the default algorithmic trades, click apply, and what you see is a list of trading signals. Before I go further though, let me explain what long and short trades are, since most traders only know about the idea of long trades. You buy low and you sell high. But there are short trades as well, which means that you sell high and you buy low. And the shorting opportunities in cryptocurrencies are just as great as the long opportunities. Therefore, the trading strategy I'm devising for cryptocurrencies is one that would trade both long and short. This way, we're not always reliant and we're not always hoping and waiting for bull markets. Now, let me show you how to read these trading signals. That section there tells you that that's the date. On the 26th of September, on 1800 hours, which is 6:04 p.m. Time zone is +2 hours ahead of the UTC, which means that's basically Paris time. We are going long on Ethereum over the US dollar at a price of 352.73700 US dollars. Price or exchange rate, really. And if you want to view the full details, you can click there, and if you click it most of the time, it will show you the same information, but if there's any extra information I do happen to provide, it will appear here. So I'll show you now how it works in practice. This is Bitcoin BTC over the US dollar. Every bar represents 3 hours of price action. And what I'm doing now is showing you when the actual trading signals were given, overlaid on actual market data. So like I said, every bar here represents 3 hours of price action. As you can see, we're not always trading. In this particular trade, it actually lasted for about a month. So sometimes, depending on what's happening, we don't have to trade all the time. There we sold, and then it crosses that support level there, resistance I mean, and then we reacted when it shifted downwards. So that's how it works, right? As the market is moving and I see a trading signal, I post it. It's been about 3 months now, and we got to try out our strategy in about 91 trades across 15 different cryptocurrencies paired with the US dollar. So I think it's time to evaluate how we went. So today, I'm going to take you through the results. Okay, so let's have a look at Bitcoin SV. BSV over the US dollar back on the 6th of July, 2200 hours. We went long at a price of 189.51 US dollar. 1 indicates long and -1 is short. So for that particular trade, we bought in at 189.51. It dropped to 172.46. That is a move of $17. And from 189.51, that is a drop of 9%. So if we had $1,000 equity, a drop of 9% would have costed us about $89.96. So at the end of that trade, we've got $910 left. That's what we've got to start the next trade with. And on the next trade, we lose 3%. So that's $30. and we're down to 880. The cumulative return on investment is now negative 11%. Now the next trade, we take on the next trade, it's much better, it gains 33%, and that adds $294 on our 880, it gives us a total of 1,175. That brings us now to a total of cumulative return on investment of 17%. And we keep doing this. And in this example, the last trade, as of the last trade, we had negative 5% return. So we now have 941 instead of 1,000. Now, if we hodled, however, if we sort of just bought and just stayed there, the price dropped at 15%. So far, we're reducing the losses compared to a hodl strategy. And we do the same analysis across all the other cryptocurrencies that we're following. So in this particular case, I made another 15 different spreadsheets for each currency pair, and that is summarized by another spreadsheet I called sum, and this is how this works. This is how the summary sheet looks like. And on the left here, it's saying that if we allocate about 1,000 per currency pair, and there's 15 of them, we start off with a 15,000 initial capital. And based on the trading signals we've gotten, had we traded it, we would have gained somewhere around these percentages. So that means that at the end of the period, as of now, we would have about 16,543. And that is an increase of 1,543. That's about 10%, 10.3%. Now, is this good or is this bad? What do we compare it with? We can compare it with the hodl strategy, the buy and hold strategy. Let's say you just bought and just held on. We can compare it to that. During the same period, from the first trade to now, the price has moved by these percentages. These then are the gains or losses per currency pair, which means that by the end, we would have ended up with 15,300. That's a gain of 300, which is about 2% of the original 15,000. If we compare that then with the strategy gain, what we're saying is that we are doing about 5 times better than the hodl trading strategy. So the result is encouraging. A return of 10.3% in just over 3 months is not bad. Of course, we don't know if this can continue. The only thing we can do is to continue trading and evaluating and analyzing its performance. And the longer it performs, the more confident we get knowing that it's able to weather the storms in the market. So what's next? Well, I will keep on reporting on its progress, so follow me at marcuscomalab.com. Bookmark the website, visit often, share what you find interesting, and have a great day.